Welcome to TradeTheMBI.com. This is John. This report is for the 21st. Well, we got a little bit of that softness that the MBI magenta there below yellow was indicating, and now we have dropped significantly below the 33 level. In fact, dipping below the 25, which is also kind of critical for weakness. And we can see a nice activity for shorts, still holding above the 76% though. So some softness, but not a whole lot to really do much damage so far. So uh, limited at best. From an NQ standpoint, even further above the 76%, but all the same activation. So, from a consistency standpoint, though, now we're finally seeing the Nasdaq and S&P synchronizing again, where they had been pretty much in divergence completely. So, I think we're starting to get ready for the blow off situation here, and the idea will be you would, well, from a bull standpoint, trap the shorts, and that will drive you to that 100% that the rising gold had indicated that we were going to get from the shakeout. Hasn't been doing the same on Nasdaq as it was for the ES, but the Nasdaq had also outperformed a bit and had, recently just started treading water for the most part, and that's literally where a lot of the market is right now, is just treading water, trying to make sense of what the Fed's doing, how things are going to go. The economy seems to be holding on, um, and it's been a real confusion. So, and a little bit of softness, though. Massive jump into treasuries, reducing the yield slightly. Um, that's that flight that skittish investors going to be running with. And I think that's where the beginnings of some decent volatility will start to take place. Not that we aren't seeing decent ranges intraday. I think they've been fantastic, but um, it's just a question of overall direction. The market really is at a standstill for the most part, even though it's getting close to relative highs for where it's been. It's just when you consider the dollar situation and potential future money printing, of course, the idea that the debt ceiling and those kinds of things may get resolved. Those will all be bonuses for the market. So it's only if those become drag out fights that we'll see something significant. So the gap up here for oil is almost filled, just a little bit further. Um, and that trend needs to continue to go lower. Any change in that one would definitely be a problem. So certainly watching crude build in that, uh, because the softer oil gets, the better the chances for an economic revitalization. I don't want to say recovery, so to speak, but at least a revitalization where you get a pump in new projects starting. I mean, I think there's still going to be a lag time, so we're still going to be dealing with some second half of the year, in betweens, and whether it's softness or there's been enough of a reduction that we get a little resilience built into things and it starts to turn around. I don't think the Fed has to do a whole lot of anything in this particular case. If they raise again, that could be more problematic than not, but I think they're trying to normalize rates from where they've been and been unable to do for what, a decade plus, and I think that this is going to be the turnaround. Um, we'll see. So far, I've been skeptical on a couple of things they were doing in the past. They were a little slow on a lot of these things. Uh, so far, it's worked out. So can't argue with success. Everyone has different viewpoints and techniques on those things. Gold from its standing, a little bit softer. Euro, not really moving much here, but I think the euro still has a chance to escalate unless we get some of that further bad news coming out of the eurozone, which I think is probably likely. Um, Unemployment situation, things like that, not looking great from a European standpoint. Same thing with their labor markets. Um, Bitcoin, that they filled back in now the positive extremes that took place right back here. I guess that was what, on the 10th. So it took to 420 to do that. I know it's a cute reference. I don't think it's all that big a deal, but from a crypto standpoint, it's kind of funny. And also ETH filling in positive extreme right to there. So those are now taken care of, and that allows new clean setup. From a 50K standpoint, you can see we've been pretty much moving to the lower side in lower and lower steps for highs, and that potentially leads to what I would think is kind of, a little bit more of a breakdown. Obviously, MBI White was leading when we got to 50%, moving back to the zero. MBI White leading again right now. That would be back down to the 41.37. Oh, and it is nice to have the intraday charts back up finally. And you can see from previous day's action, the sell signal came in. This is what I was talking about. The range is still nice. Moved all the way down. Didn't quite reach the bottom angle at the 41.40. But once it got above that 41.57 there, was pretty clean and just lost its steam as the MBI started to break down, a little bit of short activity and beautiful DSC spread started. And that did take us all the way below the 41.40. And then started to build up, but some of that was just short covering, I think. And in this particular case, now in the post market, we've just evened out. So we're right around the 41.50, right in the middle. So I just think continuing to follow the intraday range is still the best play. I think from a daily standpoint, you can see that we're just kind of stuck. I don't really see it as something that's about to imminently collapse or whatever. They're just waiting on some kind of data that will give us a clue that things are either improving or not improving, or we're literally going to get into that stagnation where it just goes blah. So once we know, we will definitely talk about it some more. But I think that the flux of it is still too prominent to give a real clear indication at this particular stage. As always, though, trade well. We'll talk to you later.